Hi traders, you're welcome back once again to the Bullish Bear FX Academy. My name is Tim Legend. I'm super excited having you all here today on this one. So you're welcome back once again to the 2024/2025 trading syllabus. Here in this channel, our goal is to teach you a whole lot you need to know and probably everything you need to know about trading from start to finish till you become a professional in this. And the goal is we want to take you guys step by step until we make sure that you are good in the trading industry. So what you want to do in case it is your first time here is to hit the subscribe button, turn the notification bell on, and please, as a way to show the support and as a way to show that indeed you appreciate our efforts and what we're doing in this channel, make sure to hit the like button. And at the course of the video, if you have any question, please do not hesitate to drop them on the comment section, because based on your question, I will understand where you need more explanation and know how to teach you more even in subsequent videos. All right, so make sure you engage in the comment section. So let's get into the main video. Okay, so now we're back to the chart. So with everything I've explained, have it at the back of your mind while we start analyzing the markets. Okay, let me just delete all the objects so far. Okay. I'm gonna use my trading view for further explanations here. All right. So here on trading view, we want to make an analysis, a quick analysis, so we can see how price plays out using supports and resistance. Now here we have supports. We have supports. We have resistance. This will, okay. We want to look for another obvious support. Resistance. Okay. Another obvious support I can see here too. Okay. So we'll go to the 30 minutes time frame. No need for 30 minutes. We'll go to 15-minute time frame. All right, in the 15-minute time frame, we zoom it out like this. Now, we'll bring out our channel, trend line. Okay. Bring out our key level. Now, why do I call this key level? Nobody asked that. I call this key level because a key level is an area of value. Okay, an area of value in the sense that is an area I'm anticipating price to likely head to. Okay, I see price below.
and I have my key level on the top. Why am I calling that a key level? I'm calling it a key level because I'm expecting that price that is below should at any time in the future come to touch that key level. A key level is more beautiful when you have it to be your area where you want to buy from or sell from. Now, for instance, we have here now to be a key level. We also have here to be another key level. You must have a key level for support, and always make sure you also have a key level for resistance. Okay, so current price should now be in between it. So your anticipation while you're bringing out the key level is you're believing that at any time price can play around and gets here finally. Or if price is ever going to break out, it should play around and get here finally. And especially whenever it gets there, there should be a reaction. That's why you call it a key level. So it's just like your point of view, your focus. You're focusing on something. You have something you have in mind if price gets to that place. All right. Either you want to buy till price gets there, or you're waiting for price to get there for you to sell, something like that. So it's just like your point of view. Okay. That's the meaning of key level. All right. Let me delete this. So your key level is good when you bring it out at least from your 15-minute time frame. Okay, from your 4 hour and 1 hour, just be doing your support and resistance. Then from your 15 minutes or your 5 minutes, you can now bring out key levels, because by your 15 minutes and 5 minutes, you should be using it as your confirmation time frame. Okay, you just want to use it to confirm further things before you take your entry from 1 minute time frame or 5 minute time frame, depending on the kind of trader you are. Okay, I used to love taking, if it's for boom and crash, I used to love taking my entries from 5 minute time frame. Or if it's for the volatility, I love taking my entries from 1 minute time frame. So it all depends on you as a trader. Okay, so you want to start bringing out your key levels from 15 minutes or 5 minute time frame, not from 1 hour. Okay, so now here we're in the 15-minute time frame. I brought this out. So my anticipation is that price should likely go up, following the channel to the top of this key level. So I'll take it as my take profit. Or if price is ever going to break out, then I know that I'm expecting price to get here and move again, or give me some funny reaction. Let's go back to the 1 hour time frame. I didn't even ask myself, what is the trend? Okay, it's actually a range. It's actually a clear range. This market is in a range. Okay, and I always advise my students, in a range, you don't want to trade in a range. Okay, especially if the range is in 15 minutes or 5 minutes or 30 minutes, don't trade in it. Okay, even if it's in a 1 hour chart, I advise you don't even trade in it, because the reason why you shouldn't trade in a range is because price keeps fluctuating with indecisions. Okay, indecisions. So you don't want to stress yourself doing some funny moves. And there's another thing that happens in indecision that you also need to understand. When price is in an indecision period, okay, when you see price in an indecision period like this, price tends to move with some more liquidity. Because why do I say it moves in more liquidity? You'll see the bulls who say, no, I don't want. The bears will say, never. The bulls will say, no way. The bears will say, never. The bulls will say, no. All right, that's where you see all those funny moves if that occurs, and even you see a false breakout. The false breakout actually didn't take place because it wants to take place. It wants to take it took place because of the strength in momentum of the indecision happening in that market. That's why that kind of a thing happened. And after that breakout, you see the bears will say never. So you see the strength they're using to move in liquidity. But if it's a normal trending market, please turn off your mic, traders. Anybody that turn on your mic, turn it off, please. But if it's a normal trending market, it moves as in agreement, like, okay, okay, okay. All right, let's pull back, pull back, pull back. All right, let's go, let's go, let's go. You see, it's a normal moving market. But once it gets into a range, it's like never, no, never. I don't agree. Do you guys really understand what I meant by the things I'm doing? Because I know I kind of like sounded nasty right now, but I hope you understand what I'm trying to explain to you between the difference between when the market is actually in a range and when it's moving gradually in a trend. If you understood what I explained, just use the chat box, say yes, I understand. Okay, I want you to really understand why you shouldn't trade in a range in markets, because it moves with high liquidity. That's why a lot of traders who are trying to force themselves to trade in a range, because they just want to make money. They're trying to force themselves and they see themselves losing money upon money. And the more they're trying to buy is going deep down sell. And they say, okay, let me sell. And it's going deep up because of the indecision and high liquidity in agreements. It's just like a fight. So you don't want to trade when buyers and sellers are fighting. You want to trade when buyers and sellers are in agreements. Okay. So I don't advise a trader to trade in a range unless you want to be a range trader. That is, you want to be a scalper. Then you have to know how to create a strategy that works good for you to scalp and scalp well. Okay. All right. So I'm glad everybody understood clearly. So in this ranging market, this is a 1 hour time frame. So since it's a 1 hour time frame, you can trade in between your 5 minutes and 1 minute time frame because it has a lot of moves. Okay. But if you saw this range in a 15-minute time frame or 5 minute, do not trade it. Do not trade even a 30-minute time frame. I don't even advise you to trade it. All I advise you to do is to set up your support and resistance and set out a zone where you want price to break out from for you to now look for your entries. Okay, that's what I advise you to do. But if it's a 1 minute or 1 hour or 4 hour, you can go inside the 1 hour. That's on a lower time frame, like 1 minute or 5 minutes, to look for certain good entries, because you will surely find entries. For instance, now this is a 1 hour chart. We can see clearly that it's a range. But if we go to the 5 minute time frame, we're going to see some good opportunities to buy. All right, we're going to see some good opportunities to buy a lot of things in the markets. You can see a massive buying opportunities. Okay, so what you want to do right now is, since the price is currently in a range, you just want to ask yourself, in between this range from the 4 hour chart, what is the current trend for the day? Okay, now how do you know what the current trend for the day is? You want to see who is where price is currently pushing to for the day. Okay, now we can see that this is a bullish trend for the day, because number one, why do I say it's a bullish trend for the day? Number one, I can see that the bulls are actually the ones in power pushing to the upside. And number two, this price is freshly coming out from a support zone. So if price is freshly coming out from a support zone, it means that the bulls will have to push it up to a certain resistance zone. Okay, and this is where they found resistance now. Currently, as we can see, they found resistance here. So now that they found resistance here, you see the bears have pushed down because they found resistance. But our anticipation is that it's bullish, it's a bullish market. So maybe this is just a mere pullback, just like this pullback we could see here. Let me zoom it out. Just like this pullback we saw here. So this is just a mere pullback. So price is currently at support. So our anticipation is that price should do what? Break out and continue till it finally gets to resistance again. So that's why you're going to look out for more buying opportunities throughout the day in this market. Okay, I hope you're understanding all the logics. So now that we have plotted out all the obvious support and resistance levels, and we have even plotted out our key level here. Okay, now let's go to 15-minute time frame to see if we can see some more confirmation before we take this trade. Price got to resistance here, push down now at support of the channel. Remember what I told you guys yesterday when we were talking about chart patterns? I told you, if you want to set entries, don't set just one entry zone. You want to make sure you have plan A and plan B. Now, let us set plan A. Our plan A right now, we can see price is currently at what? Support. So our plan A right now is to look out for a bullish pattern that can tell us that the bulls have entered power to really push to the upside. Okay. Now, number one confluence we have here is that prices are supports. Number two confluence, we can see candlestick patterns formulating around here. Some bullish candlestick patterns formulating around here is kind of like a morning star, right? So to tell us that the bulls are actually entering into the market.